Hello traders, The title of the video is Consolidation Technical Trader applies a simple technical trading technique for Canadian dollar, Japanese yen. I'm on a monthly chart of the Canadian dollar, Japanese yen without too long blah blah blah. This currency pair is consolidating between the level of 88797 or 88797 and a level of 81714. So it is a consolidation place. All right, people are selling at the top here, looking for an opportunity to sell at the top here, and people are buying at the lower part of that consolidation. All right. The median line for that consolidation is 8523.6. 8523.6. I need to remind the traders that this currency pair, Canadian dollar, Japanese yen, has a similar structure hold on a second please, like the Australian dollar, Japanese yen. A candlestick bar with a long tail piercing through a key level. All right, that key level is a little bit below here, but just take it for me like is 81714. All right, but it's somewhere here. That's the long tail. It looks like this currency pair is behaving like the Australian dollar, Japanese yen. You see again, long tail. You see those long tail piercing through that key level 81714. Right? Long tail, long tail. Can you see those? All right, another long tail. Can you see very long tail here? Long tail, long tail. So this is a support. So you can see, okay, the price went below that level, but quickly find a support and go up. And you see, anytime the price goes below that level of 8171, it quickly turn around and go back above it. It's a very, very important support level. So people are buying near the level of 81714. So it is a consolidation play. How do we trade a consolidation? Well, very simple, my friend. All right. People are selling here, so they are looking for a bearish trading setup. Can be bearish trading setup, can be candlestick pattern, a bearish engulfment, or another candlestick bar like this, piercing through a key level. They're looking for common center line to be broken at least, if I break below, and retest a common center line, and then people will implement a top-down trading method. In the old days, people will just sell here, sell. That method of trading is not working anymore. It's better to look fast for a trading setup and then to implement a top-down trading method. So you see those two candlestick bar here. It's a bearish candlestick pattern. One was bullish. You see this one closed bullishly with a long shadow. This one also open here with a long shadow. Both has a long shadow, but after a bullish candlestick bar, this one was bearish. What is it telling us? It's telling us that the price is turning around those two candlestick bar here. So look for those candlestick bar on those ones. Here again, you can see here, it's a long bearish candlestick bar. Now we have a bullish candlestick bar that almost touching the median line of that long candlestick bar. But look, you got a long tail. That candlestick bar and this one is a bullish, okay, candlestick bar. It's turning around. It went very, very deep this way, a lower low, this low here, in comparison to this low of that candlestick bar. It's a deeper low, yes or no? But look, they bought it up. Not only they bought it up, they didn't stop there, they push it up into the range or into the territory of the bearish trader. So because this candlestick bar is bearish, we can call it the territory of the bearish traders. But they went into the territory. As this one opened, traders who understand the language of the candlestick bar, okay, they start implementing a top-down trading method to buy it. All right. So, but if you are applying a top-down trading method and the signal fail, what do? You just close the trade. All right. I'm doing it on purpose. All right. You can say, John, what's wrong with you? Why are you behaving like this? All right. I'm doing it on purpose to get your attention. You just close the trade. All right. That's what you do. Here you see that's this one. This is a typical example here. You see this one here. Try to understand the language of the plan. This is what we are talking about. High volatility. Okay, this is a high volatile candlestick bar. Yes or no? High volatility. A hammer is a low volatility candlestick bar in comparison to this low one. Why? If you see a low candlestick bar with a hammer, it's bullish. But don't buy straight away. Right? Don't buy straight away when we say it's bullish. Now, to time the market and to avoid losing, all right, wait for a signal. How do you get a signal? You will implement a different time frame trading method. Monthly chart, daily chart, hourly time frame, daily chart, hourly time frame, 10-minute time frame, 4-hour time frame or 2-hour time frame, 15-minute time frame, and 3-minute time frame. Hourly time frame, all right, and then we may say 10-minute time frame and then 3-minute time frame, all right. Yearly chart, monthly chart, daily chart, quarterly chart, weekly chart, or 3-day chart, and 4-hour time frame for the entry or 2-hour time frame for the entry for position trading, and so on and so on. Yearly chart, monthly chart, all right, and daily chart for investors. You see, so it's a consolidation play here. Very simple. So talking about consolidation technique, trader apply a simple technical trading technique for Canadian, Japanese yen. This is it. So as people are buying here, what is it headed? There is an ultimate target. That ultimate target for those bullish traders is at 88797. The midpoint target is at 85236. If they are selling here, what is the ultimate target? The ultimate target for those bearish traders is this one here, 81714. The midpoint target is the same. Now that is happening here on the monthly chart. We see like this. All right. Is there anything else I need to say? It's a consolidation play. They will go to the daily chart to investigate. You see, that's what I'm saying. If you look at this Canadian dollar Japanese yen, you see, this is a Canadian dollar Japanese yen. If you compare it to the Australian dollar, you see, this is the Australian dollar Japanese yen. You see the similarity on the daily chart, inverted head and shoulder chart pattern. If I go to the monthly chart for the Australian dollar Japanese yen, do we have, you see, similar? Here is a little bit different. We have a double bottom with a candlestick bar piercing through it, but on the daily chart we see the similarity. You see that inverted head and shoulder chart pattern for the Australian dollar, Japanese yen. Now if I go back to the Canadian dollar, Japanese yen on the daily chart, you see the similarities now. Now we have again similar inverted head and shoulder chart pattern. Now you understand why most of the time I'm talking about, all right, eyes wide open, or trading like an eagle, blah, 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 blah. Oh, now you understand it. Now you understand it. You understand it? Yeah, you understand it now. So I'll put a neckline here. The neckline for that inverted head and shoulder chart pattern on the daily chart is at 82371. Write everything down, my friend. Have a notebook for each currency. Right? Know the similarities. Keep your eyes wide open. That's how you will see the similarity and the dissimilarity. And you can apply what we call the predictive fractal pattern market forecast. But now, we don't want to go there now, do we? All right. Okay. Oops. Now you are watching some French videos. All right. Okay. You see now? So we have an inverted head and shoulder chart patterns. Therefore, though there is a consolidation play, using the inverted head and shoulder chart pattern target, I will use a conservative measurement instead of bringing it all the way down here. I'll put it from the neckline to the closing price here. Traders have been following me for years. Know that George is always doing that. So they will tell you that, okay. So for those traders on the daily chart, for that inverted head and shoulder chart pattern, their target, their ultimate target is this one here. So we have a multiple target. So I will use a different color for this so you don't get confused. No, yellow is too much. All right, don't get confused. So this is their target. They also have their midpoint target. So what is a midpoint target? You apply Fibonacci retracement to the range from the neckline to the ultimate target for that one. And we will highlight. Did you say 50%? You see? I told you, by the time you know, you start trading like a pro. Didn't I say that to you before? You say, yes, George. Thank you. All right, so I'm doing all this to make you interested in the topic that we are discussing here. All right. So you see now. So apart from the midpoint target that we already mentioned, talking about the consolidation play on the daily chart, which is the signal time frame. All right. We have an inverted head and shoulder chart pattern, and we have again one ultimate target and one midpoint target. The ultimate target on the daily chart is at 86177. Midpoint target 84255. So don't be surprised. So you want to monitor the reaction of the price. If it reaches that level is corresponding. See, put back 10 around here. Then retest the pink one. You see, this is here. See, very below 10 around. You see, you retest that median. Went back to retest the pink one before coming down. Now it's at the neckline. Watch out for that one and watch out for this one. Don't ignore any of those lines. So as you can see now, if you were, or if I recorded this video a little bit earlier, suppose I was recording it here, I would have told you that this was a signal here. Press above the neckline and then retest it and validate it at a support level. Alright, this is a tricky one here. You went below it. Here you could have bought it because it's closing back up. So after it turn around like this with that long tail turn around, you will implement a top dot limit on the daily chart. Daily chart, hourly time frame, 10-minute time frame. That will be the scenario. Alright? Now, if you try to buy here, we see when it pull back again. It's behaving a bit funny now. By pulling back again, because this was not anotherly retest. You can understand that. So now they did anotherly retest. It didn't go below anymore. So they say, oh, let's retest it again. So say, okay. And this is your signal here. Now it's running away. What are you going to do about that? It's now on the edge of the moving on 100 on the daily chart. Draw your trend lines, all right, on any time frame. We want this video to be very short, okay? That's why I'm running fast. Okay? So be aware of that trend line, you see. Make it a little bit thick so you don't forget that, okay? There's a bearish trend line there on the hourly time. So pay attention to that, okay? A pullback will be better after that long candlestick bar. Another bearish candlestick bar will be nice sharp, okay? And then you go again. If there is another signal, you see, this we are now on the hourly time frame. All right. There's this triangle here. Can you see a triangle? Yes. Oh, for the first time, agree with me. Can you see a triangle? Yes. Some traders like to disagree with you. Say, no, George, I didn't see any triangle at all. What are you going to do? They like to disagree. So you say now, it would be nicer to have another pullback, you see. It would be better to have another pullback or to counter this from a higher low. And, okay, you take it gently on the edge. So you can draw that trend line also there on the hourly time frame. So this will conclude our discussion today. All right. So do all this thing yourself. All right. And while you are doing, remember this, follow the trading drill. And the trading drill is very simple. The setup and then the signal. And then the market timing. The same thing we are doing all the time. All right. So we are breaking it down. Okay. Looking for. You can look for trading setup on the daily chart. You can look for trading setup on the monthly chart. I like to use monthly chart for my trading setup. All right? But you want a trading setup, and that trading setup on the corresponding signal time frame must generate a valid signal. And then you go to the corresponding entry time frame to enter the trade. If there is no signal, never buy anything. If there is a signal, don't buy straight away. Now time the market on the entry time frame. Sometimes you may have the setup, the signal, but when it's time to enter the trade, the market environment may not be suitable, which means all kind of crazy economy news, blah 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 going on. Don't place any trade. Can quote me all over. Save your money for another day. All right. So this will conclude our discussion today about consolidation technical trader. Apply a simple technical trading technique for Canadian dollar, Japanese yen. I highlight the similarities between the Canadian dollar, Japanese yen, and Australian dollar, Japanese yen. In all cases, we want to apply a top-down trading method. It's a consolidation play. The price consolidating between the level 88797 and the level of 81714. The median line is 85236. Apart from the consolidation on the daily chart, we see an inverted head and shoulder chart pattern. The neckline is at 82371. With that, we have another ultimate target on the daily chart at 86177. All right, a midpoint target at 84255. If this video has been truly useful to you, please let us know by giving us your beautiful thumbs up. If you dislike it, be sure to mark it down, alright? However, if you think it's an essential tutorial, feel free to share with your friend on Google+, Twitter, Facebook, and Tumblr. I really love traders that are sharing our video. And I say to those traders, thank you very much. Also, you can talk about our little channel of Forex trading, 24 Forex trader in various trading forums. That will be helpful to us. Right? Sometime, depending on my mood, I may post the video first on Facebook. In fact, I need to mention to traders, all the Forex videos that I'm recording, I'm posting them first on Facebook. So if you're a Forex trader, I understand I'm posting my video first on Facebook. Any Forex video, I'm posting them first on Facebook. Because when I post them on YouTube, I'm only getting 18 views. What? When I post them on Facebook, I'm getting up to 200 views. So I post them first on Facebook, okay? So my Facebook page is stochastic-MACD, all right? Subscribe to our YouTube channel. Our YouTube channel is 24 Forex trader. Right? So the more subscribers we have, Google will upgrade that channel and we have more exposure. Then I may post maybe their video first on YouTube. We will see. So this will conclude our discussion today about consolidation technical trader applies a simple technical, technical trading technique for Canadian dollar, Japanese yen. I'm happy to meet you all, and I will speak to you soon. Thank you for watching. To learn more about technical trading, go to www.stochastic-MACD, www.dayprotraders.com, www.24elliottwaves.com. Thank you for watching.